Could this dip be a diamond in the rough, or is it time to steer clear? Today, we'll cut through the noise and give you a crystal clear verdict. I'm your host, TJ. If you want razor-sharp insights into the coins and trends that could make or break your portfolio, hit subscribe and tap the bell. Let's get started. 1. When stocks swoon, where do you turn? Traditionally, building wealth means buying blue-chip stocks or bonds and riding them up over decades. But when the market trembles, thanks to tariff jitters or geopolitical tensions, many investors ask, are equities still the best place to park my capital? You've likely seen headlines of market-wide sell-offs. As portfolios bleed red, panic sets in. Commodities like gold and real estate see inflows. Novelty keeps things interesting with wine or rare sneakers. But for risk-tolerant players, the siren call of crypto grows louder, promising outsized upside, albeit with heart-pounding volatility. 2. Crypto's 2025 rollercoaster. Look at the leading names: Bitcoin, Ethereum, even Coinbase stock. Year-to-date returns negative across the board. You'd think that in a perfect storm of stock-bond unease, crypto would shine as a haven. Yet here we are, watching major cryptos slide. That tells us two things. First, crypto still marches to its own drummer. Second, not all tokens are created equal. Meme coins like Dogecoin and Shiba Inu pulse with social media hype, but with no intrinsic use case, they tumble when narratives shift. Conversely, real-world utility tokens can hold up better, provided they solve a tangible problem. 3. XRP's value proposition. Enter XRP, built by Ripple to slay the two dragons of fiat transfers, sluggish settlement and punishing FX fees. Here's the pitch. Speed. XRP settles in 3 to 5 seconds, compared to days on SWIFT corridors. Cost. A cross-border transfer costs just 0.0001 XRP fractions of a cent, versus dollars in fees. On-demand liquidity. Banks pre-fund liquidity pools instead of locking capital in nostro accounts. In theory, as global commerce booms, so does demand for cheap, instant FX. But because banks can still use fiat rails, XRP adoption remains optional, not obligatory. Optionality makes XRP's price dance to the tune of investor sentiment as much as banking volumes. 4. Trump's tariffs. Double-edged sword. Now, factor in President Trump's renewed tariff blitz. Fewer imports could mean less demand for corporate cross-border FX, potentially denting XRP usage by financial institutions. If global trade grinds slower, banks may throttle back on needing on-demand liquidity solutions. With tariffs squeezing margins, everyday senders may lean into XRP's low-fee promise, driving thousands of microtransactions across the network. In other words, tariffs could be either a headwind or a tailwind for XRP, depending on which use case dominates: institutional corridors or individual remittances. If you're finding this breakdown on XRP's dual-edged tariff fate valuable, go ahead and smash that like button, and subscribe to TJ Crypto World. Hit the bell so you never miss our next on-chain analysis or market deep dive. 5. Is $2 the bargain basement? At around $2, XRP sits at a crossroads. On one hand, the token's utility offers a floor. Banks and remitters won't abandon it overnight. On the other, regulatory headwinds, payment rail competition, and speculative capital flows could push price lower. Add in technicals. XRP's chart shows a consolidation zone between $1.80 and $2.20, with RSI teetering near 50, no clear direction. If tariff-fueled uncertainty drags broader markets down, XRP may slip toward the lower bound. But if remittance use surges, we could see a breakout above $2.20, eyeing $2.50 next. In my playbook, that many variables, macroeconomic shocks, optional institutional demand, retail remittances, makes XRP a speculative swing trade, not a set-and-forget position. 6. The one indicator you can't ignore, the metric to watch. On-chain transaction count. If daily transfers climb above 12 million, especially with average transaction sizes under 1000 XRP, it signals retail and remittance flows picking up. That kind of organic usage often foreshadows sustained rallies, versus mere price pumps driven by hype. Let's recap. Equity turbulence pushes investors to alternatives, crypto included. Crypto in 2025 faces its own headwinds. Only tokens with real utility stand out. XRP's edge: lightning fast, low-cost FX, but banks aren't forced to use it. Tariff impact: could suppress institutional use or boost remittances, depending on who leans in. Technical snapshot: trading in a tight band. Watch for an on-chain activity surge above 12M transactions as your green light. If you're ready to track that on-chain indicator and navigate crypto's wild swings, like this video, and subscribe to TJ Crypto World for real-time breakdowns of every pivot in the crypto markets. You'll get the insights you need to trade and thrive. Thanks for watching, everyone. I appreciate each of you for tuning in. Until next time, stay curious, stay vigilant, and keep stacking those gains.